Hey folks, welcome back to the channel. And 3 weeks in a row, I mentioned the market looks bullish. And looking at the weekly for the S&P 500, we had 3 up weeks. However, this following week, I am not so bullish anymore. I'm not bearish either at this point because it's still too early to call a market top, but I am going more neutral, and I don't think we're going to see like a 2 or 3% up move in this coming week. And I'll give you a few reasons why. And by the way, these same reasons also played out over here in July of last year, where I mentioned there was likely going to be a correction over here. So will we see something similar? I'm not sure, but I am suggesting people be cautious right now. So the first reason that I'm cautious is because on the weekly chart, I have this bull channel going up, and the market has touched the line on the bottom a couple of times, one here, and on the top, we have one, sort of two, three, and now we've just come up, and this last Friday, we ended the week up here at 48.90, which is pretty much at the top of this channel. So even if we have another positive week next week, if it stays within this channel, then it'll probably be around 41.11 is the highest that it will close at. But because it's now reached the top of this channel, it's very likely that it's going to come back down and at least retest the middle of this channel here. There's always the possibility of it going higher as well, breaking out of this channel. But if that was the case, then I would be careful of a false breakout because it might do something like that. Now, because there are multiple touches on the top which acted as strong resistance before, I think it's more likely that the S&P 500 is forming some kind of top at this area over here. Second reason is we are at extreme greed again in the market. And very simply, this is when people are enthusiastic. And I wouldn't say every time it gets here, it's a signal to sell, but it's something to watch because when this index goes from extreme greed down to greed, and if other indicators corroborate the movement, then it is likely for the market to make a correction. And speaking of the fear and greed index, if we compare it, which is this blue line, to the S&P 500, we can see that the index is pretty good at calling reversals in the market. For example, in July of last year, the fear and greed index made a lower high, while at the same time, the stock market made higher high. And with that divergence, the market turned and started going down. The opposite is true down over here, where the fear and greed index made a higher low from this point to this point, or you can see from this point to this point, but the stock market made a lower low, both of these points. And then subsequently, that was the bottom for the market and it started going up. And that takes us to now where the fear and greed index is making another lower high. So similar to back here, while the stock market is making a higher high in the same time frame. Again, same divergence as what happened before in the summer of last year. Of course, divergences like this doesn't always mean a reversal in the markets. For example, we kind of see a negative divergence over here where the index went down, but the stock market made higher highs. So if the pattern plays out, then the stock market should actually go down along with the fear and greed index like that. But instead, they just both moved higher. So when the index goes back above the previous high, then that basically negates the signal and the pattern is not likely to play out. But for the most part, this is something to keep in mind when we're trying to look for where the tops and bottoms might be in these market swings. And then the last thing I want to point out is the number of S&P 500 stocks that are above their 200-day simple moving average. And this chart basically shows what percentage of the 500 stocks in the index are trading above their average price in the last 200 days. This is an indicator of market breadth, and the higher this number is, the more companies are participating in the rally. It rarely goes above 70. In fact, over the last 2 years, we've seen this number go above 70 just 3 times. What's interesting is if I overlay the S&P 500, which is this black line here, on top of the graph, you can see that when the graph reaches 70 and then moves back down again, the stock market tends to follow it and move down lower. So that was in February, and then also the graph went down in August, and the stock market also went down. Right now, the graph is kind of just hovering at the 70% line. It made a small bounce here, but I'm going to watch it closely because if the graph starts going down, then I think there's a good chance the S&P 500 will go down with it. But just like with the previous indicator, if the graph goes back up above 70 again, then it's quite likely that the S&P 500 will go even higher. So those are just some things to keep in mind. Thanks a lot for watching. Good luck with your investments, and I'll talk to you in the next one.